Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Tuesday, the 19th of July. Well, the bulls battled back today and forced many of the bears to cover their short positions in the equity markets. However, nothing has changed, nothing has been resolved, and we still have the same debt problems both here in the U.S. and overseas. Gold and silver, on the other hand, continue to hold well and look to be purchased on pullbacks from current levels. Crude oil joined in that fray and popped up today to the upside, but it remains in a broad trading range with no clear-cut direction. All in all, it's been a pretty boring session so far on a Tuesday. What I really want to see is how these markets close today, and more importantly, how they close for the week. If we have a lower close for the week in the equity markets, now last week we closed at 1316 in the S&P 500, I would consider that to be an early sign of a potential bear market. Also, we closed last month in June at 1320. So we got some very, very key levels. We're just right around those levels right now. So let's go to the market and take a look at our first market, which is the S&P 500. As you can see, the score is plus 85. Both our trade triangles, the monthly and weekly, are long, which means the trend is still up. We found support at the level we expected, right around the 13 level yesterday, and we've seen the bounce from there. This is going to be, that level is going to be a very important level. But you can see 13 comes in right around here, and we've got a nice little pop today. However, two things are happening. One, you've got your parabolic, which is right here. So the market's below the parabolic, which is not a good sign, very similar to here. And also, I'll take this off the screen because I want to scroll down and show you something else that I think you may want to pay attention to and find interesting at the same time. So let me take it off the screen. I'll scroll down. And we've got another indicator here that we look at too. And this is well, look at on the top ones, the Williams percent R, which we talked about, which is basically still not in an oversold condition. Oversold will be down here somewhere. But we have this, the MACD or the MACD was developed by a friend of mine, Gerald Appel. And basically, you see it made the cross right here, just like it made the cross right here and the cross right here. So it doesn't happen all the time, but when it does happen, you really want to pay attention because it tends to be a pretty big mover of the market. So this cross happened just a couple of days, actually yesterday I believe, and I think this market's going to be very much on the defensive. So let's see again how it closes for the week. That's going to be very important, and also how it closes today, which is really the crux of the matter is right today. So let's clear it off the screen, go to our next market. And that's going to be our silver market. As you can see, we've had a nice move. All of our trade triangles are very positive, plus 100. The trend is clearly up. You've got also, if you scope this down, you'll see we've had the crossover right here. And we're overbought, yes, but this is the one thing when sometimes you get very strong markets is you can stay overbought for quite a while and not affect the market. So here's a good example from this level. Let me just see if I can draw this with a telestrator for you. So from this level to here, you basically were overbought. So we just shoot that up to there, to there. So you're overbought, but the market was still going higher. So that's the important thing to do. If the trend, you've heard this many, many times before, the trend is your friend, and that's what you want to do. And that's why you want to use our trade triangles. Our monthly trade triangles are being long silver from 1874. It's $40.24 right now. Weekly is from 36, very positive, 36.93 on the daily. So everything is plus 100. Now when this turns around, as it will eventually turn around, you want to be flexible enough and disciplined enough to move out of the market. So we are thinking the market can go possibly up to the 43 level, which is right around here, and that is a 61.8% Fibonacci retracement right here. So that's our target zone, and we're going to hold that for a while and see what happens. But generally speaking, the trend is up. You've got some good indicators, our trade triangles, the parabolic, and also the MACD. All of those indicators are positive in the market. Any pullback will be met with pretty good support, in my opinion. So let me take this off the screen. We'll go to our next market, which is, of course, gold. Gold is over the $1,600 mark, and as you know, we were recommending we were looking at this for the 52-week high on Friday. Let me scope this in just a little bit closer so you get an idea of where we were. So let me go to 3 month, and this is Friday's action right here. And you would have got this right around the close was $1,593.20, so right around 193. I think it's 115.93 would be a pretty good guy. And you would have gotten out today on the opening, which is, you can see this based on our work, is $1,602. So you made about $9 profit just on a very short play. $900 on a full contract of gold just on a really short play. That's about the equivalent of maybe about a 25% return. That's one of the things we look at, and that is the weekend rule. We've always talked about these, and it really works very well in commodities. So you've got a big energy field. We've talked about this before in gold. It's probably going to take this market much higher longer term. We're looking for a market to basically go up to the 1640 to 50 level. That's the short term, and then I think this energy is going to be big enough to carry this market much higher, perhaps towards the end of Q3 and the beginning of Q4. So again, the trend is your friend. We're headed higher. This market is going to find very good support, I believe, on any kind of pullback. And even if they settle a debt problem, it may not be settled the way we want it to be settled. So again, that could be a very bullish factor. But the trend is clearly up, and I think we'll see how this market closes for the week again. So I'll clear everything off the screen again, and we'll look at our next market. And some of these markets actually are, you say, well, Adam, why do we keep looking at the same markets? Because what I want to do is to train your eyes to look at these markets and recognize these formations that happen and occur on a regular basis. So let's go to our next market. This is going to be crude oil. We talked about crude oil. It's minus 65, and minus 65 indicates we're in a trading range in our indicators. And as you can see, we're sort of just plodding along here. Really, it's been kind of, you could say, very boring, but boring actually sets up markets to be positive. So we've had the move up, and this could be construed as another consolidation field or energy field, and particularly if we go over $100. If we go over $100 a barrel, and it's an if question right now, this is going to indicate that this market's ready to go back up and test higher levels. If we go below these levels, below 94, then we're going to test the 90 level, in my opinion. So it's undecided at the moment, and that's what the 65 level means. You really pay attention. There's going to be a great move here, and you want to be on board to capture it. So let's clear everything off the screen. Go back to our next market, and that's going to be the dollar index. Again, we look at this market. We've been talking about it for quite some time. It's been incredibly boring, sideways action, not a lot going on. You can see it right here, and really nothing to get excited about right now in this market. So let's see how that plays out. 55, again, a trading range. I think it's not worth looking at, really, to be honest with you. So let's go to our next market, and this is going to be the CRB index, the Reuters Jeffries CRB index. And again, this is in a similar vein. You've had the sideways action, and really not a lot to show for it. So I think we're really going to either break it out on the upside, which I think we'll do. The pop today was caused by crude oil, which also had a move up. But again, that's still confined to the trading range. We've got a couple of indicators that are positive. You're actually above the parabolic, which is a positive sign. If we scroll this down, we are just where we started up above there, but it's sort of not really a strong trend. So I would say watch this market, but don't do anything really crazy for the moment. But I do have something else for you. This is pretty amazing. We have I'd love you to watch our show this Friday. If you haven't watched it earlier, don't forget to tune in on Wednesday at 5 p.m. We rebroadcast it. But you would not believe some of the phone calls we've had so far. Simply amazing. There's one story that we're going to tell on Wednesday, which you'll have to hear for yourself, because it's pretty extraordinary. A gentleman that is a Market Club member, and he's going to share some of his successes using the Market Club trade triangles. So now it's your turn. You can basically be part of the Market Club TV show this Wednesday. It's easy to do. All you have to do is simply call the number on the screen, 410-867-2100, extension 101, and you can leave a message. Tell us how you use Market Club, and or just ask a question about the markets. We'll do our very best to answer your questions on the air if we can. And so don't forget, call the number 410-867-2100, extension 101. Extension 129, excuse me. It's so easy to do, and plus you get automatically entered to win a free Market Club membership. Even if you're a Market Club member, you can still extend your membership if you're picked out by Susan. Susan does it on Wednesdays, so be sure to tune into the show. I think you'll enjoy it. There'll be lots going on. We've got some new features that I think you'll enjoy. So, hey, this is Adam Hewison. We have a show tomorrow at 1 o'clock, first of all, and then 5 o'clock. So don't miss it. Adam Hewison, every success. Let's see how these markets close today.